Key levels helps you to understand how you can be able to reduce bulky information from previous price data and be able to have clarity from the higher time frame down to the lower time frame. Now, these key levels can appear both on the higher time frame and as well on the lower time frame. I'm going to show you how to use all of these things to make good decisions in the market using live trade example. But before we go into that, if you're seeing me for the first time, my name is Divine, and what I basically do on this channel is document how I trade and also show you the mindset behind my strategy. If you're not particularly like this, I want you to smash the subscribe button and like this particular video. I'll be right back. I'm going to be analyzing GPUSD and I'm going to be using it to show you a live example on how you can be able to use key levels to make good decisions while you're trading. Now, mind you, if I analyze this pair, I'm going to be taking this trade if price open tomorrow will be Monday, and I'm going to be updating the results on my status. Now, for us to identify these key levels, the first thing we want to do is to understand market condition. Is price going to the upside? Is price going to the downside? Or is price basically resting? And for us to identify these conditions, it has to be on daily time frame because it's more strong on the daily time frame. So first thing is this. I'm going to simply go to the daily time frame to identify the condition of the market. And for us to identify the condition, we want to simply use our support and resistance to identify where buyers are willing to buy from and where sellers are willing to sell from. The point where buyers are willing to buy from is referred to as support, and the point where sellers are willing to sell from is referred to as resistance. Now, if you look clearly here, clearly see that at this point here is simply support point where buyers are willing to buy from. What this means is this: anytime price comes to this trend, buyers are willing to buy. The first point here, buyers are willing to buy. Here, buyers are willing to buy. Here, buyers are willing to buy. And here, buyers are also willing to buy. And now, for every point where buyers are willing to buy from, this equivalent point where sellers are willing to sell from, that is referred to as the resistance. Now, for us to identify the resistance here, we can simply use our trend line to see that this point here is basically a point of resistance. Why? Because when price gets to this trend, sellers are willing to sell. When price gets to this trend, sellers are willing to sell. When price gets to this trend, sellers are willing to sell. Now, for us to identify key levels, which is the most important thing that gives us clarity on what we're going to be doing on the lower time frame, we want to simply identify the points where price made a new reaction from on a particular trend. Now, if you look at the support trend here, you can clearly see that the point where price made a reaction from recently is simply at this point here. So this point is basically a point of key level. So this is a key level here. And I'm going to remove this trend. And on this trend, the last point where price made a reaction from is simply here, which means this point is simply also a key level. Let me remove this other trend. And here is simply a key level. Now, for every key levels, there has to be a resistance key level. And these two key levels here are simply acting as a support key level. Now, for us to know where the next key level is going to be like, we want to simply understand how price is behaving at this current point here to know if price is going to use it as a key level or price is simply going to go higher to create a key level for us to have a resistance key level. And the way we can find out that is simply to understand what price is doing on the 4 hours time frame and simply identifying market structure and, most importantly, supply and demand zones. And we want to identify these on the 4 hours time frame. Now, on the 4 hours time frame, we want to understand the market structure that price is creating. And if you look closely here, we can clearly see that price is simply creating higher highs and higher lows, right? That means if you look properly here, you can clearly see that price is simply giving us a low, a high, a low, a high, a low, and price needs to give us a high. Now, what we want to understand is this. We want to understand if price is simply going to use here as the high, or price is going to go higher to give us a high. And if price gives us that high, there has to be a low that will continue the high. Now, for us to understand if this is going to be the case for GPUSD, we want to simply identify supply and demand zones on this particular time frame. Let me clear off this thing. Now, for us to identify supply and demand zones, we want to simply identify supply and demand zones from this particular key level that price gave us here, this recent key level here. We want to identify the supply and demand zone from this key level to the current point where price is, right? And for us to do that, we want to simply zoom in properly and see the candlestick very well. Now, the first point of demand you can simply see on this particular key level is simply at this point here. This is the first point of demand here. This is also another demand here. And this point is also another demand here. Now, this point is also another point of demand. Now we're able to identify 3 demand zones on this particular point where price was going from this key level to the current place where price is. Now the next we want to do is to refine these demand zones to become a point of interest. And we want to refine it on the 1 hour time frame. On the 1 hour time frame, after defining point of interest, we want to understand where liquidity is to know if price is going to go higher for price to give us a high, or price is going to go lower for price to give us a high. Whichever way, price is basically on an uptrend. Now on the 1 hour time frame, the first thing we want to do is to refine these zones with a specific candlestick. It could be a doji candlestick, it could be a dragonfly, anyone you want to choose. Now I'm simply going to be refining this zone here with these doji candlesticks that appear here. All of these doji candlesticks that simply appear there is my first point of interest. Right? This is the first point of interest that is acting as a demand zone. Now the next point is simply here. Right? I'm simply identifying with this doji that is here. And you can see price reacted from these points here and give us this buy. Now if I'm to refine this demand zone here, I can simply see that this point is simply the point I want to refine it to. This doji candlestick that appeared here also. And this point is simply the recent demand. Now having understood that we have identified or refined this our demand zones, the next we want to do is to identify liquidity. Now for us to identify liquidity, we want to simply understand if price is creating general liquidity or price is simply creating equal highs and equal lows. I want to do that on the 15 minutes time frame. Now on the 15 minutes time frame, we can simply see that price is simply giving us a trend here. Right? We can simply see that price is giving us a trend here. And also we can simply see that price is also giving us an equal highs at this point here. So what I want to do now is this. I want to simply understand how price is going to behave if price opening tomorrow being Monday. Right? And on the 15 minutes time frame, calculate that this place is also a high here. So this point is also a point of liquidity. Now for us to take an entry on this particular pair, what we want to do is this. If price open tomorrow being Monday, we want to see price do 2 things before we make a reaction. Because we're going to buy, we're not going to simply buy because price is going to the upside. And even if you're going to buy, I want to look for a good point we're going to buy from. And the good point you're simply going to buy from is either to buy from this particular demand zone here or this particular demand zone here. But for us to buy, we want to simply see price do 2 things. If price open tomorrow be Monday. If price open tomorrow be Monday and we're going to buy, we want to simply see price simply begin to sell to the downside here and come into this zone here. If price comes to this zone and give us a change of character, then we're going to look for buy. But if we're going to sell, we want to simply see price open tomorrow. If you're going to sell, I want to basically see price open tomorrow, being Monday, and begin to buy to the upside. That means if price open tomorrow and start going to the upside, then I'm going for a sell opportunity. Because this buy movement is simply a fake move that is taking out liquidity. And if that occurs, I want to see price give us a change of character. Then I'm going to sell to this demand zone as my TP1. And depending on how price behaves here, I'm going to sell to this point as my full TP. So what this means is this. A sell opportunity is this. If price open tomorrow be Monday and start going to the upside, I'm simply going to be taking an entry if I see a change of character. My stop loss above this point, might take profit 1 here, and might take profit 2 at this demand zone here. Why? Because this demand zone, this price action here simply induce liquidity that price is simply going to use to trigger this demand zone here. Now, if I'm going to buy, I want to simply see price do these things if price open tomorrow being Monday. Instead of price to sell to the upside, I want to simply see price begin to go to the downside and probably come into this zone and look for a change of character to the upside. That's going to be my analysis on GPSD. So my entry is going to be based on what price does if price open tomorrow, which I've shared with you already. That will be all for this video. I will see you in the next one. Peace.